morning session first. So we have the three drives pattern here. 1, 2, 3. Institutional order flow entry drill down here. After taking sell side out, it rallies. Then we have the short-term reversal pattern here. This is a classic price action pattern. It's really good to indicate that we're likely to see some measure of retracement. It can be an all-out reversal, but because we have unfinished business, which is that weekly imbalance up here, that weekly volume imbalance specifically, really nice run to that breaker and fair value gap right there. That right there, this folks, right here, this thing right here, that is a complete model. We have a higher structured, not that it's higher time frame, but a higher structured breaker. Okay, a breaker is a low that has a high to the left of it and a higher high to the right of it. Okay, so it's high, low, higher high. Once this low is broken, it is here. We have an imbalance. That little imbalance right there, that fair value gap that's not highlighted, it's trading up into that and then hitting the breaker. This is also an optimal trade entry. It's also trading into a what? Bearish order block, which is a closed candle prior to this movement lower. And then look at the delivery here. Boom, speed right down into that old imbalance. Then it creates a consolidation. Is that surprising? No. What time of the day is it? It's New York lunch. So what is it doing? It's creating relative equal lows and then it rallies. What is that going to entice traders to think? That's support. So any long holders, they're going to chase that. They're going to run it up into the breaker one more time, which is mean threshold, middle of this down close candle right here, the big beefy longer bodied candle. Midpoint of that and then shifts it lower, attacks the sell side, which is the classic run on New York lunch. It's a stop hunt. That's the macro for the lunch hour. There's a lot of people out there saying there's no lunch. Nobody's going to lunch, during lunchtime. Okay, these people don't know what they're talking about because the algorithm is going to reprice to those stops and it's using time. What basis is it? It's the New York lunch hour. Look at time, 2:15. 1 o'clock. So in that 1 hour period between noon and 1 p.m. New York local time, we have now classic enticement for retail traders to see that as support. So that level right there is going to have a lot of sell side liquidity. And the market runs from the breaker down into that, hits it, and trades into the imbalance right here, which is institutional order flow entry drill as well. And this is also a fair value gap. This nice little retracement into that and then delivers harshly right into that fair value gap.